Hey traders, Parker here with another video. Today I'll be doing this market recap real quick. As you can see from the labels, the S&P 500 made an all-time high of 480, 482, 482.72 from its previous all-time high of 479.98. If we look into our labels, let me do this real quick to get this backed up. So we can look at our day. These are my quarterly sector labels. You can see for the day, week, month, and quarter how everything is fared out. Today, it looks like, I want to say the NASDAQ had the greatest percent change of 2.02, and the tech sector, which is in the NASDAQ, got 2.31% change. So those are your highs, and then you can see the so it's tech, NASDAQ, and I want to say communications is third. That's on the daily, and then you can see for the week, you can see for the month and the quarter. And one of the things I more often pay attention to are my day scores, and that's where you're seeing these 10s, 5s, and I don't see anything else. You see a -10, but you'll see a 6 or a 2, some of those things right there. But be unfamiliar with my day score, depending on if a stock is above their previous day high, low, close, and their current open, I assign a score to it, and it adds them up. And if they're below, I assign another score. So take for example, if a stock is above its previous day or previous high, it'll score 4 plus. If it's above its previous close, plus 3. Yeah, I signed a score for previous high 4, previous close of 3, open 2, and its low 1. So those add together give you 10. So that's why you can see these with the 10s, they're above all their previous levels and their current open. Any of the other ones are below some level, but for the most part, that's how my day scores work, and they work for each time frame that I have set. And you can see that S&P 500 financials, all the ones with 10s are above the previous levels and the current open. But one of the things I always like to go to for this month, because we're starting out a new year, pay attention more so to the monthly and then the weekly. And then as the year goes out, we'll pay more attention to the other higher ones. But for the most part, we can see the S&P 500 on the monthly is a 10, financials is a 10, NASDAQ, communications, tech, and healthcare. And we wanted to go to the quarterlies, it should be the same, and the year should be the same as well. So, but those tell you where to go and look for, where to go scan, especially if you use my seasonality indicator. But we can see for the S&P 500's average range over the past 5 years. I should have put this on 10. So give me a second. You can see from the S&P 500's average move over 10 years is average range over the past 10 years has been $21.23. And its high-low range right now is $16. So that's 76. It's used 76% of that range. And 52-week high, 52-week low is week change from the open, month change from the open, quarter change from the open, and a year change from the open. So I'm going to get rid of my labels, but pretty much they tell you where to go look. So we're going to look in the NASDAQ, tech, healthcare. So I'm going to have to leave one of these up, but I'm going to get rid of the other one. So we'll just leave the quarterlies up. Get rid of the day. Okay, with those gone, we can see the high. But these blue lines, they represent Fibonacci levels between the 52-week high and low. You can see the previous month high, and you can see these orange and the light green are the previous week. And you can see the white is the current open for this month, and you can see the purple is the previous close for last month. And we have the, let's say, week low. Those bubbles, all those bubbles represent all those different levels. So, like I said before, these tell you where to go look for stocks. So I already have this populated. I'm looking at the NASDAQ. All NASDAQ stocks. I'm excluding the pairs for what is that? FX pairs. But these are all the stocks right now. I have them sorted right now by the percent change. I mean, not by their percent diff for the year. On average, this is up 90% of the time, and it shows your average diff or your percent change average for that month of 2.83, and it's looking over the course of 10 years. So this is a financial stock, ARC, ARCC, but it has the highest score for the seasonality. So ARCC. Let's see, ARCC. And we can see where it is right now in accordance. It's going to take a second to populate just because I have it on 10 years to find everything. So it already hit from its open. It already hit the its average percent change average of $20. Not $20, but 2.6%, which is 20.49, and you can see from the open 1997. So that's where we are with this stock. But this just shows you how to scan for the stock. So we can look through. I'm gonna just scroll through. If you want to pause the video and see some of these stocks, let me see if I can do a little slow. But if you want to see some of these stocks, just pause the video. These are all the ones for the NASDAQ. And I'm going to shift it in a moment to go and look at those for the tech and some of those other sectors for anybody who wants to know. And these are the change week, month, quarter, and year change. So same thing. And these highlighted ones show you that they have an average volume of 2 million. And all of the ones that I have brought up, they have an average volume right now of 1 million. Over on a 20-period average. So if you're looking for those or any type of form of liquidity, those should be pretty liquid. You'll find some of those that don't. But those are the stocks that found in NASDAQ. So we want to drill down even more. We're going to go to the information technology, and we're going to scan, and it's going to tell me I got a lot because I put 2,000. But everything's been scanned according to everything that's has the least amount of shares. So this is everything that's in the information technology according to the seasonality scan. And I have anything that's up 50% or greater on average. So you're gonna see some of the same things from the NASDAQ. Alright, so let's look at the one with the greatest percent change, AYX. And we're not going to be looking at that because that's garbage. DocuSign would be the next one, DOCU. And it's just taking a second to populate for the years. And it's really doing this because I had these labels on. And I do have something on the other screen as well. And that's just a day, how it happened today. And we'll just look at it for a moment while I'm waiting on that. This is what DocuSign did today. This little orange deal right here is open range. And you can see it finally broke out of the open range at 9:30, came back in, hit this yellow lines of VWAP. These clouds, other clouds, they're just the day Fibonacci levels with no lines, just clouds. And you can see what it's doing after hours as well. So after hours, high and low. And you can see the pre-market. That's my levels indicator if you're unfamiliar with that. And you can see the day, Bob. And we're going to come back here. And you can see from the open, it's up It already hit it. So it's up over 5.226%. And you can see for the month, it's up 7.32%. And it's an inside week and an inside month. That's what these other clouds represent. This big gray cloud represents a inside month. This purple cloud represents an inside week. So in one sense, it's ranging. It's up, and it's actually forming a flag pattern. So it's probably looking for a breakout. And you do have a bullish propulsion error right here with increased volume. So let's do this. So let me get rid of my Laguerre. Do I want to get rid of Laguerre? I'll leave it alone. I'll leave it alone. But that's the one for tech, healthcare, XLV. So we're going to change this to XLV, industry, healthcare, select all. Yes. And here are healthcare stocks. I'm going to scroll down for anybody who want to look at any of these stocks. But I'm just going to look for the top ones, and you can look for the other ones and do your own analysis for those stocks. But VEV. You can see how everything's populating. But I do see there's exhaustion as well. So this might need to pull back. So you can see here's the open, here's the previous close, and you can see there's up on the month 8.36%, and its average diff was 3.9%. If I'm correct. It's actually saying 4.34%. So I'm getting two different numbers. I wonder why. But for the most part, this is one of the stocks that's up greater than 50% of the time for the month of January. And you can see where it was actually down and then it pushed up. It held the previous week levels and been pushing up out of the previous week high back here on the 10th. And just was pushing up, had a slight pullback, or you can say a flag pattern for the next leg up. And we can go back to this next one is core. Syncora, and it's just populating. You can see the years going up, and there's our 10 years. You can see it's percent change average is 3.24%, and you can see that it's actually buttoned up against its previous week's high back here from the 12th. So hopefully it continues going up. But that's for healthcare. So we did NASDAQ, healthcare, and let's go to financials. Hit the scan. And I'm going to scroll through. You can pause the video for anybody who wants to take a look at any of these stocks. And for the month of January, FI has the highest percentage of probability, because that's what it's showing you for Jan. It's up 90% of the time from its open, 80%, 70% time from its open. Average percent change, even so average dip, but average percent change is 3.28% over 10 years. So when we look into it, zoom in, and over 10 years, it's showing me a different average percent change. I have to check on that. But for the most part, it's showing bullish. It was caught up in this little range right here when the month started out, and it broke out from there. You can see from that previous week high, it pushed up above and it's still going. So for the month, it's up 5%. Let's look at another one with a greater diff. BX Blackstone. And it's actually down. So Blackstone's down. So we finally hit one to diverge from its seasonal change. And I should have seen that, but is it popping up? It is popping up back into this range right here. So it's popping up back into this range, and we still got a couple of days before the month is over. So BX, and we can look across the board from its week, its month, everything is red. So it wouldn't have been a good candidate, but everything is not. This, like I said, this is for probability over the past 10 years for the stock. So let's look at one with better. So EFC. But even though it's showing you this, it still has a chance to pop back above and keep going up. So it's just one of the stocks you just want to pay attention to that hasn't made its move yet. But it has made, for the past 10 years, its average range has been $10. Its high-low range currently is $14.87. So it's actually used 148% of that. So it still might have some gas in the tank, and you can see where it opened up, hit this fib level, came down and hit this fib level, and hopefully it pushes back up, but it's going to have some issues at this 121. I think the one we said EFC. It's up, but only slightly for its so you have an inside week. Its average range is $1.39. That's not good. So that wouldn't be one of the great candidates right there. So we're gonna move on from financials to communications. So let's go to communications. Hit scan, yes. And we can, these ones right here have the greatest odds, or just the greatest percent that they've been up. But I wanted to sort it more so about a month. But CNK, it's up. CNK. It's up, but this one's way down. Looks like I looked at it before. I don't know when. Cinemark. I saw the movies. I don't know. It's above its open. It just broke back above its previous month's close, and its average dip was 4.7%. Was it the same, or was it? It's saying 6 over the 10 years. Let's see. So I got an issue with this and my labels. So for the most part, I actually did add my volume labels, and we can see there's an issue. It's not a lot of volume and relative volume being traded here at these levels. I would expect more volume than what's I have it set for 20 than what it's showing me over this time period. And when I raise it up, you can see you have this great amount of volume over here. And relative to this volume over here, it's not that great. But it is increasing, so I would say that. But let's look over last January, and it was down. That January. Skyrocketed on this January. But I'm not gonna look over too much over this stock. But I don't like this one just because its connection with the movie theaters and AMC. So let's go look at something else. So one of the other top ones is Google. I guess I should have gave it a chance to really catch up. So you got Google, Fox, Take-Two Interaction Software, Fox, BC, T-Mobile. I don't know Momo, but we'll go look at Google real quick. Let's see. And this is what I'm talking about. This is one deviation above regular volume. Standard deviation volume. So that's something that you would want to see in the stock that's bullish, especially breaking above. Is this all-time high for Google too? Close to it. It was, it's not as all-time high, but it's getting close to it. And let me get rid of these drawings so we can see everything clear. Its average dip from its open was 4.71%, and it's still rising. It broke above last week's high. That's what this orange line is, and here's last week's low. And it's continuing to push. Here's your percent change, and I think communication was the last one I was going to look at. But I don't know why I keep switching like that. And you can see from these labels right here what are the best ones currently anyway. This month, this week. And that's pretty much going to be the end of the video. I appreciate you guys taking the time to listen to what I had to say. I hope that you got something from this. And remember, I'm not a financial advisor or anything, so stay safe out there. Do your own due diligence. And I'm still working on this bundle. I'm not going to sell anything separately, especially with the scan. Everything's going to be together. So just be on the lookout for when everything is finalized. I appreciate you guys taking the time to listen to what I had to say. If you haven't already, please like and subscribe, and God bless.